Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. The Federal Reserve is about to turn the money printers back on, and you heard that right. More dollars, more liquidity, and more inflation is on the horizon. Now, most people hear that and they panic. They worry about higher grocery prices, more expensive gas, and another housing bubble. But here's the truth. Every major wealth transfer in history happens during periods of monetary expansion, and this next one might be the biggest we've ever seen. So today, I want to break down exactly what's happening, why the Fed has no choice but to print money again, and most importantly, how you can use this moment to build long-term wealth through entrepreneurship and ownership instead of watching your savings get devalued. Because while the middle class complains about the inflation, the wealthy are already building new businesses, buying productive assets, and positioning themselves for the next cycle of abundance. So let's talk about how we can all do the same. Jerome Powell, the chair of the Federal Reserve, spoke at the NAB conference in Philadelphia. At the time of recording this video, that was almost 2 weeks ago. It was a 47-minute speech, but here's the short version. The Fed admitted, without saying it directly, that rate cuts are coming. When Powell said their outlook on employment and inflation hasn't changed since September, that's Fed speak for we're following the same plan we already outlined. And that plan includes cutting interest rates twice before the end of the year. It's going to be in October. At the time of recording this video, it's October 28th, but more than likely we already know they're going to cut rates. If you've been paying attention in the economy after the last 5 years, then you kind of understand what's about to happen. First comes rate cuts, then comes the end of tightening, and after that, the printers come back on. And that's exactly what's about to happen. The market is already pricing this in. According to the CME Fed Watch tool, there is a 98.9% chance of a rate cut on October 29th. Again, that's tomorrow, but by the time you watch this video, I already know that it happened. And there's a 98.7% chance of another one in December. If you're not familiar with this tool, just Google CME Fed Watch tool, and you can see all of the rate cuts that are going to happen throughout the year. So I'm sure you're asking, what does that mean? Well, that means cheaper borrowing costs are around the corner, not just for banks and Wall Street, but eventually for you and your business too. Now, here's where things get interesting. When the Fed cuts rates and ends quantitative tightening, they're setting the stage for what economists call liquidity expansion. In plain English, more money will flood into the system. The same pattern has repeated for decades. The 2008 crisis led to $4 million being printed. The 2020 pandemic response added another $5 trillion. Each time inflation spiked, asset prices exploded, and the entrepreneurs who understood timing made fortunes. We are now approaching the next version of this same playbook. Now, I want to be straight with you for a second. Money printing doesn't make everyone rich. In fact, it often widens the wealth gap, but if you understand how this system works, you can position yourself on the right side of it. When the Fed prints money, it doesn't land evenly. It starts at the top in the hands of big institutions, banks, and investors, and then it trickles down through loans, credit lines, and investments. By the time it reaches everyday consumers, prices have already risen. That's why the saying goes, the closest to the money printers benefit the most. This is called the Cantillon effect, named after the 18th century economist Richard Cantillon. He observed that the closest to the point of the money creation see their income rise first. Hedge funds, private equity, investment bankers, and the wealthy who own the most stock. And those furthest away from money creation see their purchasing power decline. But that doesn't mean you can't get closer. You just have to become a producer in the system, not a consumer. That's the key difference between the people who get crushed by inflation and the people who ride it to financial freedom. When the money printer comes on, there are two types of people that emerge. Consumers are the ones who spend their extra cash on depreciating goods. Think new cars, clothes, vacations, all of which lose value as the dollar loses value. And then there's the creators. These are the people who use that same liquidity to buy or build productive assets, like businesses, like digital brands, real estate, or intellectual property that will earn income while prices rise. This next wave of easy money is not just for economic events, it's a once-in-a-decade wealth opportunity. Think about it. If the cost of borrowing drops again, it'll be easier to finance new ventures, scale operations, and invest in cash flowing assets before inflation sends replacement costs through the roof. That's exactly how the wealthy play the game. They borrow cheap money to acquire income-producing assets, then they let inflation erode the real value of their debt while their assets climb in value. That same strategy is now available to you if you prepare before the crowd wakes up. When interest rates fall, a massive chain reaction will begin across the economy. Consumers will feel richer, spending will increase, and investors pour capital into growth. Real entrepreneurs are quietly building the foundation of generational wealth during this time. So here's what I believe is about to happen. First, cheap capital will flood the system. Small business loans, credit lines, and startup funding will become easier to get. Lenders will lower their standards because risk feels manageable again. This means business owners with solid credit, an EIN, and a structured business foundation can access more funding than they could in the last 3 years. If you want to learn how to structure a business, please check out this video right here. I'm going to link that. It's going to show you exactly how to build a business in 2025. Second, demand will rise across industries. When more money circulates, people spend more. This means more service-based businesses, more e-commerce stores, and creative digital brands will all be in high demand. So whether it's selling skills online, building a product brand, or launching a digital agency, growth becomes easier when liquidity expands. And third, inflation will lift asset value as more dollars chase the same goods, prices will rise. But if you own the asset, whether it's inventory, content, property, or intellectual property, your net worth will rise with it. In this instance, inflation becomes your ally instead of your enemy. So how do people actually prepare for that? You need to get your business credit ready right now. You need to build your digital infrastructure right now. And you need to get your systems in place so that when credit loosens, you can scale instantly, not 6 months later when everyone else is trying to play catch up. If you've been following this channel, you know I've been showing you exactly how to structure a business for funding, setting up your LLC, building business credit under your EIN, and positioning yourself to tap into $50,000, $100,000, or even $500,000 lines of credit with no personal guarantee. And that's not just theory anymore. That's how you get closer to the money printer. So let's talk about what kind of businesses thrive when the Fed turns the money printers back on, and we're gonna break this down. Number one, asset-light online businesses. When inflation rises, cost of material, labor, and inventory will go up. And that's why I always talk about digital businesses. They often outperform traditional ones during these cycles. Think content creation, online education, software, marketing agencies, and affiliate businesses. I've been talking about this so much. These business models have high profit margins and they scale fast when money is cheap and consumer confidence returns. Number two, real estate and asset-backed ventures. When rates drop, real estate value tends to surge again. If you can use business credit or strategic partnerships to acquire or control property, even through rental arbitrage or short-term rentals, you can benefit from rising asset prices while locking in low financing. Number three, print on demand and e-commerce. With people spending again and online shopping habits stronger than ever, product-based businesses using on-demand models like Printful or Shopify will see huge gains. You don't need to hold inventory, you can leverage global fulfillment, and you can scale it very fast. Again, I've been talking about this so much. I know some people don't really pay attention, but you guys are really missing out on opportunities. Number four is service-based agencies and consultants. When capital is cheap, businesses reinvest in marketing, advertising, and automation. If you run or start a creative agency, web design, ads, consulting, or automation services, your client base will grow as businesses look to capture the next wave of growth. Number five is content and IP ownership. During the pandemic money printing era, millions of fortunes were made from YouTube, digital courses, and online brands. And that same opportunity is coming back, but now it's going to be with AI tools and automation, which is 10 times easier and cheaper to start. The key is to own intellectual property, because while the dollar loses value, your ideas, when packed into product or content, gain value exponentially. Now, there's another layer to this story. Other countries have been de-dollarizing for years, moving away from dependence on the US currency because they see the long-term risk of infinite money printing. But that also creates opportunity for innovation at home. As confidence in fiat money fades, people turn to systems that can't be easily manipulated, whether it be gold, Bitcoin, or private businesses that generate real cash flow. The same trend that's pushing countries to seek independence from the dollar is the same trend that can make you financially independent from the system itself. You don't have to fight the Federal Reserve. You just have to stop being a passive player in the game. Start your business, build your credit, acquire income producing assets, because if they're going to print more money, you might as well build the machine that catches it. Also, we're entering what some analysis call the melt up. Now, this is a stage in every cycle where asset prices, business valuations, and investor optimism all surge before the next correction. It's the same energy we saw in 1999, in 2020, and even during the Roaring '20s. And while most people see bubbles as dangerous, smart entrepreneurs see timing windows. Because the truth is, the people who got rich in those eras weren't the ones who timed the crash, they were the ones who built during the boom. You don't need to predict the next recession. You just need to position yourself to win regardless. And that will mean building a cash flowing business that thrives when liquidity expands. You can use your business credit to leverage cheap capital before the masses do, and converting cash into productive systems, not liabilities. But I always implore you to start a cash flowing business first. The Federal Reserve may be turning the money printers back on, but this time you don't have to be a victim of it. You can actually use it, but you want to use it responsibly. If you don't have a business or understand how to make money from your business, do not borrow money that you cannot feasibly pay back. So what should you be doing right now between the next round of rate cuts? Well, here's a short checklist. You want to set up or strengthen your business structure. Make sure your LLC, your EIN, and your business banking accounts are all well established. This allows you to qualify for funding and position yourself as a legitimate entity when lenders loosen requirements. If you haven't already, build business credit, start with vendor accounts, then move to revolving credit cards and then lines. The goal is to separate your personal and your business credit so you can borrow more strategically. You want to develop a scalable offer, whether it's a service, a digital product, or an e-commerce store. Have something that can grow without your constant labor. That's how you compound wealth during expansion cycles. Build a brand, not just a business. In an age where attention is currency, owning a brand gives you pricing power. Use platforms like YouTube, Instagram, or TikTok to build trust and audience equity. Stay liquid, but invest in growth. Cash will be king in the short term, but trash in the long term. Keep enough to operate, but direct any excess funds into growth systems that generate returns above inflation. By doing this, you're not just reacting to inflation, you're using it as fuel as well. I want to thank you guys so much for watching this video. In the coming months, you're going to see more about the Federal Reserve pausing QT, cutting rates, and eventually stimulating growth. Those are just different ways of saying the same thing. The printers are warming up again. You can either fear it or you can prepare for it. And if you understand how capital cycles work, you'll realize that every time the Fed inflates the money supply, they unintentionally open the door for everyday entrepreneurs to make life-changing moves if they act fast. The middle class will shrink, inflation will rise, but the creators, the builders, they will rise with it. This is your window. You can't stop the Federal Reserve from printing money, but you can stop trading your time for dollars that lose value. You can build systems that scale with inflation instead of collapsing under it. So if you're serious about creating wealth in the next cycle and not just surviving it, you want to start right now. Build, invest, and position yourself before the wave hits. Because when the money printers turn back on, those who are ready won't just keep up with inflation, they'll actually outrun it. Once again, thank you so much for watching this video, and you guys have a wonderful day.